Get Rich Slow with John Wolf. So today I'm going to talk about conventional loans, and this is also going to be the basis for how you can actually shop for loans. Um, for conventional loans, there's two different places where you look for the costs and the prices. So one of them is the monthly payment, and the other one are the closing costs. Looking into the monthly payment, what makes it up are the principal and interest payments, so that's where interest matters. You're going to have the property taxes, that's determined by the property. You're going to have the homeowner's insurance, that's determined by the property and you. And you're going to have the mortgage insurance rate if you didn't put 20% down. Now, mortgage insurance rates and interest rates both vary with the amount of money you put down and with lenders and your own credit score. So sometimes I am a higher interest rate than a competitor, but my mortgage insurance rate is vastly lower. Sometimes not, that's just kind of an example. Now, on the closing costs, when you look at the form, and this is where I wish I had a graphic design person, sometimes it's broken out exactly this way, sometimes you kind of have to figure it out, but there are sort of three different series of costs that you're going to have to pay, and only two of them matter at all when you're comparing different lenders. And let me explain that. So you have Section A, which are like direct loan fees. You have Section B's, which are like services you have to pay for to get the loan done. And then you have Section C and on. And Section C and on, Section C is specifically title insurance fees in the great state of Oregon, where I'm right now. If you buy the same house on the same day, I mean, you close on the loan on the same day with three different lenders, the actual title costs will be exactly the same. However, when you get quoted, you'll see all kinds of different numbers, and that's literally because as a lender, I have to guess what I think title fees are, and I overestimate that because we're in a strange legal situation where if I underestimate it, then I actually have to eat the cost. And if I overestimate it, nobody eats the cost because you pay the exact right amount at the end. Same thing goes for insurance and taxes, except for the fact that I'm not penalized if I'm wrong. I'm just wrong. So we start with an estimate to fill out the numbers so you have a good idea as a consumer, but those aren't the exact numbers. But in any case, they will be exactly the same between any 5-10 lenders if you close on the same house on the same day. So what you want to focus on is the Section A and B. And Section A is where you'll find straight up origination fees and where you will pay or be credited points. Funny thing about the accreditation of points, they don't have to put it in that section. I don't know why. Section B, the only thing that really distinguishes it to you from Section A is that Section B has real costs. So like on mine, I often show a $100 cost for pulling a credit report. Pulling a credit report actually costs me something like $25. While right as the loan is finishing in your final disclosures, instead of that number saying 100, it'll drop down to the real number, and that's what you'll actually pay. But you might pay the full $100, and there are reasons behind why that might be for you. So anyways, some companies, like I just saw a Veterans United quote, which charged $3,000 flat for Section A except for points, and Section B all rolled into one origination fee, which that's totally okay to do. That's not weird. The only thing that was weird on the quote that I looked at is they actually had a charge for points to buy the interest rate down, and they had a credit to decrease the closing costs. I've never written an offer that way. I think I can, but if I was going to give you a $2,000 discount, I would just decrease the point charge for you by $2,000. I wouldn't like give you a $5,000 charge and give you a $2,000 credit or whatever. That doesn't make sense to me. But anyways, that's what it did. So where you need to look, again, just reviewing back, you need to look at the mortgage insurance rate and the interest rate as far as payment goes. And then you need to look at the Section A and B costs, and you need to make sure if they're charging you Section A costs like points, but they hit it somewhere else on the piece of paper, that you find it. And that'll let you compare things apples to apples, reasonably speaking. Now, all sorts of other things are going on, and there's all sorts of other special programs and possibilities that may or may not show up on those sheets, even if they are happening, even if you're getting them. So that's why, kind of again, I have a job as a professional, because there's so much richness and creativity to what I can do. You want to support me? I do mortgage loans in Oregon and Washington. So if you're doing a purchase or refinance, I'd love it if you hit me up. And like, share, and subscribe. Have an awesome day.